Hi, I'm Mei Zi Ho from Goals Getter. July has been a really interesting month. After a relatively flat performance year to date, as of 31st of July, the NZX 50 is currently up 5.8% month to date. The NZX mid caps are up 9.3%, and the NZX small caps are up 8.6%. This is all month to date numbers. The bulk of this movement was due to dovish comments from the RBNZ a couple of weeks ago, as investors factor in the prospect of earlier than previously thought rate cuts. Looking forwards, we have a really big reporting season ahead of us in August as we look to close to 50 companies that we own or are at least of interest or relevant to our portfolio. I'll touch on a few of the bigger names that are reporting to tell you what we are looking for. First up, we've got Fletcher Building, who has had a disappointing year with earnings downgrades, business write-downs, and leaking pipe issues impacting this year's results. Most recently, however, they announced a breakdown of the ship that transports cement around the country, which will impact next year's earnings by about 10 to 30 million. So any commentary around the current trading environment and the outlook and how they'll deal with this will interest us. Next, we've got Auckland Airport. They're expected to fall within its earning guidance range. Beyond that, we will be looking at the outlook for passenger volumes, which has stalled over the recent months, and any additional commentary on the Commerce Commission's recent review on the airport's aeronautical pricing. Next, we've got Spark. They delivered an earnings downgrade for this year's results a couple of months ago. Now, this was attributable to several factors, most notably lower government service management revenues. As a result, the market is expecting weak results, and the focus will be on the earnings outlook and ability to continue to grow its dividend shares going forwards. Chorus stated that its earnings were tracking to the upper half of its initial guidance range, which is positive. The company is entering its second regulatory period from the start of the year, so our focus will be on how recent and forthcoming regulatory outcomes enable Chorus to continue to lift its dividend per share, and also on the result of its capital management review. Now, NEXTDC is an Australian data centre operator. Our focus here will be whether Next will deliver revenue growth this year, next year, and whether current expansion plans will be accelerated, and lastly, how current AI trends will affect workloads and overall contribution to Next's growth. Meridian recently signed a long-term deal to keep the New Zealand aluminium smelter Tiwai open. Given this certainty, we will now look for Meridian to provide an update on its dividend policy going forwards. EBOS is a healthcare and medical supply company. We are focused on how the company is progressing on replacing the lost earnings from losing the Chemist Warehouse contract. So any updates on M&A prospects, customer acquisitions, and cost out will be of interest to us. Now, besides company-specific earnings, we also look for anecdotes in this broader sector sense. So for example, the consumer sector has been largely underperforming, as you'll know with your wallets and how tight everyone is now. While earnings will take a while to flow through these companies, the anticipation of this is very evident in the market movements in this sector following the Reserve Bank's dovish OCR comments indicating a sooner than expected rate cut. So in this sector, we have Sky TV, A2 Milk, Sky City, Scales, Restaurant Brands, and Michael Hill reporting here. While we will be looking for outlook statements and how these companies are preserving their P&L and balance sheet while the consumer is hurting. Now, another sector that we look at is the retirement sector. It has performed well lately, especially after the tough 12 to 18 months with suppressed housing market sentiment. Markets are now pricing in interest rate cuts sooner, improving the sentiment in the retirement sector, which believes lower rates will be better for the residential property market. In addition, more recently, a takeover offer for Alvida, who is a smaller retirement village operator here in New Zealand, has been disclosed to the market. The offer of $1.70 is at a 65% premium to the price that closed on that day at $1.03. Now, listed retirement stocks performed well on the back of this news, as it is potential transactional evidence for the value that we see in the retirement sector. Somerset will also reports in late August. We will be keeping an eye on the group's margins as we understand that cost pressure remains. We're also very keen to see how the sell down of the new St John development is going. Now, St. John's is a high-density development that is very capital intensive, so we'll watch for whether there are any delays here, as any delays would potentially disappoint the market. Now that brings me to an end of my market recap for July and August. We hope to give you a further update while we review these results and how they ultimately affect our funds. Thank you.